Hi, Grok. How are you?
Hey there, I'm doing great. Thanks for asking. How about you?
Yes, I feel good because now US market Nasdaq 100 future is all-time high. Meanwhile, Nvidia also take back the number one, top one market value, right? Versus Microsoft. So what is your opinion regarding today's market performance?
That's exciting to hear. Nasdaq 100 futures hitting an all-time high and Nvidia reclaiming the top market value spot over Microsoft is big news. I don't have real-time data to dive into the specifics of today's market performance, but I
Wait,
can
wait.
tell you that
So why not you just search the latest data during our conversation, right? So maybe give me some, maybe like a background investigation. Tell me the root cause of today why Nasdaq 100 having all-time high. Do you know the reason? That is my question.
sure, let's dig into that.
Yeah, please do.
Based on posts on X and web info, the Nasdaq 100 hit a record high recently because of a few key factors. Strong tech earnings, especially from heavyweights like Nvidia, are driving momentum. Nvidia's surge in AI and chip demand has been a huge catalyst. Also, optimism about a potential Israel-Iran ceasefire has eased geopolitical tensions, boosting investor confidence and pushing risk assets like tech stocks higher. Upbeat macro signals like easing global trade policy
Okay,
worries.
so you are giving the first factor is that Nvidia upgrading of the Q3 performance per se. So then what is your expectation of Nvidia's Q3 performance? Do you have the latest data of its B200 or even new products B300 expected sales number for this season as well as next season?
For Nvidia's Q3 performance, Web Info shows they reported record revenue of $35.1 billion, up 17% from Q2 and 94% year over year, with data center revenue hitting $30.8 billion, up 17% from Q2 and 112% from last year, beating estimates by $1.95 billion. This strength is largely tied to their AI chip dominance, especially the B200 series. On the B200, it's already shipping, with strong demand for AI workloads. The GB200 systems.
Okay. Understand. You are giving some maybe a lot of data. I don't know whether our audience they're able to really digest immediately. Maybe I'm giving you a more specific question regarding the PEG. Please do use forward PE. Give me a real-time calculation of PEG, P ratio versus growth data.
Got it. Let's focus on the PEG ratio for Nvidia. From what I've got, Nvidia's current price to earnings ratio is around 46.44, based on a stock price of roughly $144.17 and trailing 12-month earnings per share of $3.14. For growth, analysts estimate Nvidia's earnings growth rate at about 45.1% annually. To calculate the PEE by the growth rate, 46.44 divided by 45.1, which comes out to about 1.03. A PE of 1.03 suggests Nvidia's stock is fairly valued relative to its growth.
Yes, I mean, given the Nvidia's position in Nasdaq, right, 1.0 something. And what is your expectation of Nvidia price at end of this year? Any idea?
Yeah, a PE
Yeah, please do.
for the end of 2025, forecasts vary, but some analysts are bullish. Long forecast predicts a price around $154 by December, with a range of $142 to $166. CoinCodex estimates a range of $123 to $148.99, while Benzinga sees toward a $6 trillion market cap. However, bears point to risks like trade tensions or competition. So I'd say a concern.
Yeah, regarding the competition, right? Now AMD also is catching up from in terms of the growth. So then, what is the idea whether the expectation? That is my question.
Based on web info, the sales gap between AMD and Nvidia might narrow slightly in the next 2 quarters of 2025, but Nvidia's dominance is likely to persist. AMD is making strides with their Instinct MI350 series GPU. Nvidia's B200. This could help AMD gain some ground in the AI and data center markets, where they've already hit a 39.4% CPU server market share, surpassing Intel. Posts on X also highlight optimism about AMD's ROC platform improving and UA Link potentially challenging
term from like a foreseeable around next few years, Nvidia of course will be the number one. But my question is, what is a business opportunity for AMD, right? Because from my consideration, AMD is like a holding a position, right? Raise the price frequently. Okay, so maybe I'm asking you another question. I observed that the Tesla versus Nvidia, these top two basically is like they're in a situation of compete with like a rising around 3.3% versus Tesla dropping around 5%. For me, it looks like a competition between these two are still going on. So what is your idea why Tesla dropped while Nvidia is rising now?
For AMD's 50 series GPUs. AMD's introduced the MI355X, which offers up to 4x performance over their last generation and a better price to performance ratio
Wait.
than
You didn't catch up my last question about the Tesla versus Nvidia. Now Tesla is dropping.
Looking at the real-time data, Tesla stock is down to $323.468, a drop of about 5% from yesterday's close of $340.47. Meanwhile, Nvidia is up to $152.777. Why is this happening? For Tesla, web info points to a rough patch. On June 5th, Tesla took a 14% hit, criticizing Musk over a tax and spending bill. This kind of new vehicle registrations year over year through early 2025 has investors jittery. Trade tariffs and Musk's polar AI chip demand. Their recent Q3 revenue
Okay,
of 35.
so you're telling about some stories everyone knows. Well, I'm asking you something more specifically. Based on the financial data of last quarter, even foreseeable next quarter, even next year, unlikely Tesla will deliver satisfied data versus Nvidia, who is giving maybe significantly growth as well as a significant dropping of the PE if let's say Nvidia stock never rise for a future. Am I correct? So my question is why still Tesla is so attractive even from the financial data it is weak? That is my question.
You're spot on about Nvidia's strong position. Based on last quarter's data, Tesla reported a tough Q1 2025 with a 20% drop in auto revenue and net income of just $409 million on $19.3 billion in revenue, a 71% profit decline year over year. Analysts noted weak demand, with Tesla's vehicle deliveries down and projections for 2025 at 1.35 million vehicles, 27% below expectations. Nvidia, meanwhile, crushed Q3 2025 with $35.1 billion in revenue, up 94% year over year, and data center revenue soaring 112%. Looking ahead, analysts expect Nvidia's earnings to grow 45% annually, with next quarter's earnings per share up 15 cents and next year's up 97 cents. Tesla's outlook is shakier, with earnings expected to decrease 12 cents this quarter, though a $1.32 per share increase is projected for next year. If Nvidia's stock stalls, its PE could drop significantly, making it even cheaper relative to growth, while Tesla's PE remains sky high at 118 versus Nvidia's 46.44. So why is Tesla still attractive? It's less about raw financials and more about narrative. Investors are betting big on Tesla's AI and robotaxi dreams.
Yeah, so there everyone know you're talking about because Tesla has a big boss who is very good in telling a story. That one I agree, but the problem is whatever his story, basically they are assets outside of Tesla group's scope. For example, for instances, like XAI is out of Tesla, right? XAI basically is combined with X, your platform. I'm talking about Grok. Another thing is like Xbase, right? Xbase or Starlink. I would say they have nothing to do with Tesla. So people are dreaming about the big boss, Elon Musk. Well, his portfolios is so complicated. It just partially comprises of Tesla. Okay, anyway, so that's why I cannot really foresee or expect Tesla will be having significantly growth for the future next few years. Do you agree with me?
Yeah, I get where you're coming from. Elon Musk's portfolios are a tangled web, and Tesla's just one piece of the puzzle. You're right. XAI, X, SpaceX, Starlink, Neuralink, and the Boring Company are all separate from Tesla. For instance, XAI is focused on AI with a $40 billion valuation and no direct tie to Tesla's balance sheet, though there's talk of potential integration, like XAI's models training on Tesla's data. Starlink, under SpaceX, is a 4 million subscriber internet beast with a $350 billion valuation, but again, it's not boosting Tesla's financials directly. Now, on Tesla's growth, your skepticism makes sense. Tesla's Q1 2025 was rough. Auto revenue dropped 20%. Net income fell 71% to $409 million on $19.3 billion in revenue. And vehicle deliveries are projected to miss targets by 27% next year.
Okay, so everyone know, thank you for giving us so detailed data. Okay, maybe I'm giving you another question, right? Now tech giants are rising, especially those AI-related, high-related stock, like a TSM, also rising significantly. So my expectation, these top three, Nvidia, AMD, as well TSM, will be rising continuously for this quarter as well as next quarter. Maybe they will be at least around 20, even to 30 to 40 pricing increasing for this year, 2025. How you agree with my expectation or my opinion based on your data research? Give me a possibility of this rating rates.
You're pretty bullish on those tech giants. Based on the data, your expectation for Nvidia, AMD, and TSMC to keep rising this quarter and next, potentially by 20 to 40% in 2025, has some grounding, but comes with caveats. Let's break it down. Nvidia, Q3 2025 revenue hit $35.1 billion, up 94% year over year, with data center revenue soaring 112%. Analysts expect a 45% earnings growth rate annually, and price targets for year-end range from $148.99 to $250, implying 0 to 64% upside from the current 144.17K. Your 20 to 40% prediction is plausible, especially with strong AI demand, but trade tensions or supply chain hiccups could cap gains. I'd say there's a 70% chance of at least 20% growth by year-end. AMD, AMD's making waves with MI350 GPUs, with projections of $3.5 billion in data center GPU revenue in Q4 2025. Earnings are expected to grow 33% in 2025 and 35% in 2026. Exposts suggest AMD could grab 10 to 20% of the $500 billion AI accelerator market by 2028, but they're still at an 8% GPU market share versus Nvidia's 92%. Price targets for 2025 are around $116, $160, suggesting 0 to 38% upside from $160. Your 20 to 40% call is a bit aggressive, but possible if they execute well. I'd give it a 50% chance for 20% plus growth. Up 39.6% year over year, with AI chip revenue expected to double in 2025. They hold a 62% foundry market share, and 24/7 Wall Street projects a $203.61 price by year end, a 6.3% gain from current levels, though some targets hit $255, implying 33% upside. Your 20 to 40% expectation is on the high side, but strong AI and 5G demand could push it. I'd estimate a 60% chance of at least 20% growth. Overall, your bullish outlook aligns with the AI-driven momentum, but 20 to 40% gains for all three in 2025 is ambitious. Nvidia's got the strongest shot, followed by TSMC.
Okay, then
AMD's gain.
how about 2026? Another 20 to 40 pricing growth? Okay, maybe I'm asking something more detailed.
For 2026.
What is your expectation of maybe Fed rate cuts for next 2 quarters? Could be 2 times or 3 times. The earliest month will be July or September. What is your idea and possibility of this percentage?
Based on WebInfo, the Fed's likely to cut rates 1 or 2 times in the next 2 quarters of 2025, but July seems unlikely, with September or later being more realistic. Here's the breakdown. Recent projections show the Fed holding rates steady at 4.25 to 4.5% through at least July, as policymakers like Alberto Musalem and Raphael Bostic have signaled a wait-and-see approach due to tariff uncertainties and inflation expected at 2.5% through 2025, above the 2% target. Posts on X suggest traders see an 80% chance of a September cut, with the second possibly in October or December, aligning with the Fed's June 2025 dot plot, forecasting 0.25% cuts by year-end. U.S. Bank notes interest rate traders expect the first cut in September or October, with a median federal funds rate projection of 3.9%.
Okay, so so everyone agrees that this year only left over with maximum 2 times of interest rate cut. We agree. Then how about next year, 2026? How many rate cuts are you expecting? Could be like 3 times, even less than 3 times. What is your expectation of percentage of the possibility? That is my question.
For 2026, WebInfo suggests the Fed's looking at fewer rate cuts than earlier projected, with estimates ranging from 1 to 4 cuts. Morningstar forecasts the federal funds rate dropping to 2.5 to 2.75% by the end of 2026, implying roughly 4 0.25% cuts from the current 4.25 to 4.5% range. Deloitte's outlook, with a 20% chance of higher inflation at 3.5%, suggests the Fed might tighten in 2026 before easing again in 2027, which could limit cuts to 1 or 2. Exposts, like one from Morgan Stanley, project up to 7 cuts starting in March, but that's an outlier. More conservatively, Goldman Sachs predicts 1 cut by June 2026, reaching 3.5.
Yeah, so that's why all the analysts of investment bank they are reducing the expectation of numbers of rating cuts, right, for next year. For me, my understanding of my analysis is showing that will be make the duration of period of the cutting rates even longer than expectation, crossing more than 3 years. Yeah, in other words, it is showing another possibility that saying the bullish market condition will be lasting for next even more than 2 years. So
that's an interesting.
Yeah, please go ahead.
Analysts are scaling back rate cut expectations for 2026, stretching the duration of cuts over 3 years. Like you said, it could indeed signal a prolonged bullish market. WebInfo backs this up, Morgan Stanley's cautiously optimistic, citing strong corporate earnings and AI-driven growth, keeping markets buoyant, even with fewer cuts. With the Fed likely holding rates higher for longer to manage 2.5% inflation, markets could stay resilient, especially for tech giants like Nvidia, AMD, and TSMC, which thrive on innovation and demand. I'd say there's a 70% chance the bullish conditions extend 2+ years, but watch for shocks like trade tariffs or geopolitical flare-ups that could derail it. Want me to dig deeper into any specific sector or stock for this outlook?
Yeah, thank you, thank you. And maybe my last question, because I talked to you a lot, right? I don't know whether people are able to digest in detail. So my last question to you is, today, Nasdaq 100 rising to new time high. How about tomorrow? How about the next week? Any potential risk is leading another significant drop after new time high? Any expectation, any idea regarding this point?
No problem. I've enjoyed the chat. For tomorrow and next week, with the Nasdaq 100 hitting a record high, the momentum looks strong, driven by AI chip demand and easing geopolitical tensions, like the potential Israel-Iran ceasefire mentioned in web reports. Short term, the index could keep climbing. Posts on X show bullish sentiment, with traders betting on tech giants like Nvidia, up 2.29%, and AMD surging. However, risks are looming. JP Morgan warns of a possible 10% drop by year-end if inflation stalls and forces Fed rate hikes, while X posts like @Rushimanu of predict a 45% crash within months, citing overvaluation. Historical data notes Nasdaq futures fell 4.7% after April's tariff scare, so trade policy or Middle East escalations could spark volatility. I'd say there's a 60% chance of stable.
So those presumption were those very old information. Maybe I give you some justification regarding possibly dropping. That is around next month, July 9th, the 90 days of delay for the reciprocal tariffs will be ended, right? That is saying Trump maybe will call tariffs again, threatening other countries. So what is that perspective from your research or your observation upon the latest data?
Based on the latest info, your concern about July 9th and Trump's potential tariff threats is spot on. Posts on X, like from @MyStockEdge and @TheNavroop Singh, indicate Trump's tariff delay is set to expire on July 9th, 2025, which could see him reimpose tariffs on countries like China, India, and Japan if no trade deals are reached. This aligns with his earlier moves. On April 7th, he threatened a 50% tariff hike on China, which rattled markets, with the Nasdaq only edging up 0.1% that day, while the S&P 500 dropped 0.2%. Web reports, like from Reuters, note that Trump's erratic tariff announcements have already caused an 18.9% plunge.
Okay, I don't know why you suddenly stopped. Okay, so give a word for July 9th, end of the delay for tariffs. Are you optimistic or pessimistic about the future? Give me a few short sentences.
For July 9th, when the tariff delay ends, I'm cautiously pessimistic. If Trump reimposes tariffs, markets could face a hit, especially tech stocks like Nasdaq. But there's a decent chance he extends the delay, keeping things stable. Trade tensions with China or others could still spark volatility, so brace for a bumpy ride.
Okay, thank you for this conversation. Bye bye.